They've been looking like an excellent set. I'm just going through the press release. The domestic sales for the quarter have gone up by 23%. Your first take on the segmental moves that we've seen? Milk and nutrition, they say, have showed resilience. We were not expecting much of a positive number in this segment. But overall, first, give us your sense with what you're making of these numbers.
Yes, yeah, good afternoon. And you're absolutely right. I think the number uptick of 23% is also driven largely by the volume-led growth, and that is more inspiring than anything else. Because in a situation like this, wherein probably uncertainty is all around, when the coffee price and the milk price have moved up, in this scenario, if your volume-led growth is basically taking care of your higher prices of input, it probably helps. So the beverage portfolio, the confectionery portfolio, as well as I think the food portfolio, that is a Maggi portfolio. Each of these portfolios have actually, I think, produced relatively better volume numbers, and so the realization along with. And this is translating into a good amount of profit performance as well. So it's quite inspiring. Maybe I think we should see more such kind of numbers coming from other FMCG players as well. But at this point of time, yes, I think the valuation wise, we always know that I think the valuations are not cheap. But at the same time, I think the growth is suggesting that the stock could possibly find a base here at the current market price.
Okay, so that's on that. And Deven, you also said that other FMCG companies could be producing numbers like this. Do you believe quarter four could finally be that turnaround strong quarter for most of the FMCG staple companies, the likes of HUL, who last quarter saw very sluggish growth, and someone like a Marico, Dabur? Could this be the tide turning for FMCG finally?
Well, I would think so because consumption power is something which is driving this company, and the consumer in tier two and tier three cities, they are spending more amount of money compared to the urban areas, particularly in tier one. So from that perspective, if you look at it, the reach of these companies is giving them the advantage of producing higher business. You mentioned about HUL, Nestle, Britannia kind of companies, they have created a significantly large amount of reach. And if they keep on producing the volume-led growth, then in such situation, inflationary pressure on the input products, be it sugar or be it any other food material items in particular, or even for personal care items of HUL, I think the chemical baskets, probably I think these are all some of the areas where high cost pressure would otherwise affect the company. But because of the volume-led growth in the last quarter, they are relatively better. So can't be very sure about it that in April to June quarter, the same situation would prevail because in April to June quarter, we are having a situation of higher input cost and significantly higher in some cases. That could possibly have its say on the margin. So one would like to listen to the commentary of the companies, I think, coming out and what they talk about in this particular quarter. That will be more important vis-a-vis the only result of last quarter that we are talking about.
This is Harsha. Give us a
Yes.
sense with regard to the numbers. Of course, it's a standout set of numbers. We've not seen 26% margin since Q4 FY24 from Nestle, and this time it's 26% plus. But I'm trying to understand what the forward-looking headwinds could well be. Could it be that we are seeing a sort of topping out with regard to margins, given that food inflation has started to trend upwards? And could that be a very real risk to margins going forward? And I know that it's the wrong day to be pooping the party, but I'm trying to get a sense as to what could one make of the numbers going forward as well.
Yeah, Harsh, good afternoon. Well, I think you are absolutely spot on. I think this particular quarter is going to be a spoil sport. Uh, Input costs in various cases have increased, and I think it's difficult to say at what level I think these companies are absorbing the entire cost at this point of time because we are still in the first month of the quarter, that is April to June quarter. And I'm not too sure whether I think each and every company has formed up their strategy as to how to beat this input cost pressure that they are facing. In my viewpoint, I think it will be early prediction or maybe early speculation, if at all you want to use that word. I think to bring up the subject of I think what could be the impact on the margins for this quarter. We hope that they are in a better position to pass it on. Fortunately, the consumer demand scenario remains absolutely strong and it's robust actually. So from perspective of looking at this particular quarter, April to June quarter, one would listen to the commentary of the management, of course, but we believe that I think the consumption pattern is not changing. and that gives you more confidence. Cost pressure might affect 26% margin, may not remain. It may have, I think, it's say of 1.5%. Who knows? I think at this point of time. But if that is so, then some amount of moderation can be expected on the perception side. Maybe the profit picture will continue because of the higher amount of volume growth that these companies are producing. That is my take, at least for now.
So that's a very comprehensive take on these numbers. And like you were talking about commodity costs, in their press release, Nestle says that coffee prices continue to trend lower, supported by favorable crop in Vietnam and forthcoming crop in Brazil. Cocoa prices remain subdued, sugar prices remain stable. What they're not liking right now is edible oil prices. They are firm, they continue to move higher, as has been the case with wheat because of unseasonal rains in April, and milk prices are also firm. So that was the take coming in terms of the press release of Nestle, what their commodity outlook is. However, despite this, they have not set out any announcement or any forward-looking statement on what they aim to do with all of these price hikes. Will they pass it on? Will they absorb? So that was Devin Choksi who had joined us on the show. Thanks, Devin, for that. And he was talking about how these companies may be able to pass it on entirely, the price hikes that we're seeing, or they could get absorbed. And if they get absorbed, what happens to the margin number? 26% looking solid right now. But how sustainable is this in the future is going to be something to watch about. But that is a worry for a later day, because if you take a look at the stock of Nestle right now, looking exceptionally good, 4% uptick on that one. Kunal, quick chart check on Nestle.
Yeah, it's a very strong day for the stock, coming back into a multi-month breakout, I think, if I'm not wrong, almost like a 1.5-year breakout for Nestle, very close to that. So I think it's a very strong day. This also reached the point which I was making earlier, that the FMCG stocks are at the cusp of revival for themselves. Of course, stocks like Nestle and the price movement over here would probably exude confidence across many of the other stocks in the FMCG pack. So it looks attractive.
Okay. Kunal, just another quick question. It's looking strong today, but what are the levels this opens us up to? So that's the first part. And should one, if someone has missed today's move, should one initiate a fresh long at the current level, or are the downside risks outweighing the upside?
No, I would say the upside risk is outweighing the downside risks for the stock price. There is always a possibility that stocks post results, even after delivering great results, they would probably come into a slight bit of price correction. That's a natural way of how stock prices work, because traders, they generally jump into the stock prices in the anticipation of the results. And once the results are delivered, say above expectations, which is at par to the expectations for traders who have taken positions earlier, they're bound to close down some positions over there. So there could be a mild profit booking here or there, which could probably happen. But that would be part and parcel of how trading framework generally establishes for such kind of stocks. But when results and when fundamentals generally drive into the stock price, we generally see stocks breaking out into new regimes for themselves. I strongly sense that stocks like Nestle, and with the help of Nestle, other FMCG stocks could enter into that stronger regime where these stocks could break out and see much more higher levels for themselves on a positional play.
Okay, so that's on Nestle and some of the other stocks in the FMCG basket. But on that note, time to slip into a very short break. We'll be talking about lots of stocks and lots of sectors on the other side. Get you a fundamental as well as technical view on all of them. So stay tuned and we'll be right back.